Hello, welcome, good evening. My name is Julia Rothacker. I'm the head of concierge here at Public. I need to start with a few disclosures. Um, any references to any specific security, index, or strategy is illustrative. Nothing I'm going to share tonight is any investment advice or tax advice, because I don't know your specific portfolio or tax situation. But I'd love to talk you through some of the advantages of direct indexing. This is intended to be an educational conversation about some of the common use cases so you can make the choice that's right for you. So, a quick intro on me. My name is Julia Rothker. I'm the Director of Concierge here at Public. That means that I work with our highest net worth investors as well as our most active traders to help them achieve their financial goals. I want to share with you guys why I joined Public and why I'm so proud to be a part of this business. Public is building the next gen platform for serious investors. And what that means is Public is a place where you can build a multi-asset diversified portfolio. You can have your brokerage account, your IRAs, you can have a direct indexing product, your bond account, your equities investing, you can trade options or crypto depending on your risk tolerance. And I think it's a genuinely unique place. And part of what we're trying to do is expand our offerings to really meet the needs of sophisticated investors. And that's why we launched direct indexing. So I want to run you through our agenda. First, we're going to give you an overview of direct indexing. We're going to get into the use cases for direct indexing, as well as the process of getting started with direct indexing at Public. I want to start with a little bit of an introduction to direct indexing. So direct indexing is a strategy that allows you to buy the individual stocks or a subset of the stocks in an index or a broad-based portfolio. So historically, the way that you would buy an index is via a mutual fund or an ETF. And so what that means is some index provider, like a big financial services firm, would buy all the companies in an index. You'd buy a single security that held all those underlying companies. But thanks to technology and fractional shares or owning, part of a share rather than a whole share, Public's able to offer direct indexing or the ability to own the underlying companies in an index rather than owning just a single security that then owns all the underlying securities. This has been a product that's existed for decades, but it was only available to the ultra high net worth, via a private bank or behind a financial advisor. And the minimums for these products were in the hundreds of thousands or even millions, because to own the shares you needed to own in a direct index, you had to have a ton of money because had to buy those whole shares. Thanks to some technology, Public's able to offer direct indexing with minimums of $1,000. So in a really exciting opportunity, now anybody with $1,000 can have access to this product that used to be exclusively available to the ultra high net worth. I want to talk a little bit about comparing ETFs with direct indexing. So a lot of folks who are moving into our direct indexing product are either moving cash that they have on the sidelines in our high yield cash account or our bond account, our treasury account, and as rates are falling, they want to move into the market. The second most common, conversion folks are doing is from ETFs into our direct indexing. And so I want to talk a little bit about the differences. The first difference is ownership. With an ETF, you own a single bundled product. You just own one ticker that tracks the index for you. With direct indexing, you directly own the individual underlying stocks. You may not think that's important, and if that's what you decide after this conversation, totally fine. I do think there's some interesting news that came out recently where Schwab, an ETF provider, initially planned to vote against Tesla and their executive compensation plan. Tesla shareholders who had their assets with Schwab were incredibly upset about that. And Schwab ultimately changed their mind. But what's important is that the individual shareholders of their ETFs didn't have a voice. They didn't get to have an opinion about the Tesla executive compensation. So whether you were for it or against it, you didn't get to decide. With direct indexing, you actually own the underlying shares and get to vote on shareholder matters, including things like executive compensation. So regardless of what you think about what pay packages should look like, you actually get to have an opinion when you are investing via a direct index versus an ETF. The second advantage of direct indexing versus ETFs is the customization. With an ETF, you can't customize. It's just whatever the index is, and they track it for you. With direct indexing, you can adjust it. You think a company's overvalued, you don't like a company, you can control and adjust. The third thing that we're going to talk about a lot more later is tax loss harvesting. With ETFs, you have fairly limited ability to do what's called tax loss harvesting because you only own one security. With direct indexing, you own hundreds, and that allows you to more effectively tax loss harvest. I'll talk a lot more about it. And then finally, rebalancing. With ETFs, it's done by the fund. With direct indexing, it's automatically something we run for you. And so just to quickly recap, direct indexing used to just be for the ultra wealthy. Now it's accessible. You can have direct ownership, low minimums, automated tools, and you can get index-like performance with more flexibility and tax benefits. I want to talk now about a couple of the biggest use cases for direct indexing. The first, and the reason I moved my assets into our direct indexing product right away, was tax optimization. So if you're in a taxable account, your brokerage account, direct indexing allows you to sell individual stocks in the direct index that are at a loss relative to what you purchased them at. And in general, even if markets are up overall, there will still be some companies that are down in your portfolio. And so when that happens, our automated tax loss harvesting software can go in and harvest those losses, sell the security, lock in that capital loss for the year, and that can offset gains elsewhere in your portfolio. And for me, I had some good options trades in the spring. And so I've got some short-term capital gains in my portfolio this year. And so I'm using my direct indexing losses to offset some of those gains, and that will translate to a lower tax bill. The second thing I want to talk about is customization. Whether or not customization matters to you is absolutely your preference. You can set up a direct index straight to exactly try and match the index's returns as best as possible. But if you want to adjust it at all, you can also do that. I think there's a couple of common reasons someone would want to customize. For me, I do some customization based on my investment theses. I think certain companies in one of my indexes is overvalued. And so I don't really want to buy into that name right now because I think it's going to come down. So I excluded a couple of companies from my direct indexing account because I, from a fundamentals perspective, thought they were overvalued. The second reason folks tend to customize is because they have some sort of something else going on in their portfolio. For example, one of my colleagues who sits near me has a sector he prefers to manage manually. He has a lot of opinions about this sector. He's actively trading in that sector day to day. So he doesn't want that in his direct index because he's managing it actively himself. The third example I'd highlight is for folks with ethical reasons to not want to own a company. With direct indexing, you can invest according to your values. For some folks, that might be around climate. For one of my good friends, she was really excited to use our direct indexing product because she has some religious beliefs that means she doesn't want to own certain companies. And with direct indexing, she can exclude those companies from her portfolio. So whatever the reason is that you want to customize, direct indexing allows you to do that. The next use case I want to highlight for folks is managing concentrated positions. This comes up a lot for my friends who work in big tech. They've gotten lots of share grants for the company that they work for, and they don't need to own anything else. They already own enough. So they want to exclude the company that they work for from their direct index because they've already got enough exposure. I also, have plenty of clients who over the years have made really specific investments into companies they believe in and have accumulated a pretty substantial position. They want to manage that separately from their indexes. They don't want to add to their exposure. And direct indexing is a great way to do that. So for folks on this call who maybe work in big tech, this can be something you might want to consider. I now want to spend a little bit of time talking about getting started with direct indexing at Public. If you go into your app, it's very easy to go in and get this set up. There's a couple of features that I would highlight. The first is it's super easy. All you need to do is select the index you want to track, select how many positions you'd like to have in your portfolio, how frequently you'd like to rebalance, as well as how you want that index to be weighted. You can then also exclude assets that you'd like to not include. So this is a little bit of a preview of what those screens look like when you go into the app. I now want to just highlight a couple of the different levers that you have to customize your direct index at Public. First is how many indexes there are available. There are over 100 to choose from, whether you want a sort of classic like the S&P 500, or you have a really specific sector or area where you'd like to focus. The next thing I'd highlight is that you can adjust the number of positions you'd like to have in the index and how you'd like to have them weighted. Next, how frequently do you want to rebalance your portfolio? And this is an important one to consider. I have my portfolio set to rebalance daily. This is because I'm very concerned about optimizing tax loss harvesting. I know that, if the algorithm is able to scan my portfolio every single day, it's more likely to find losses and to be able to build tax losses for me. That said, there are some transaction costs. It's not like we charge a commission to trade, but there's some like regulatory fees. So for some people, they don't want that. Monthly or quarterly or annually is a better fit for them. If you never want to rebalance, that's also an option. You will start to see higher tracking error, which means that the portfolio returns may deviate more from what the overall index is doing. Finally, I want to highlight that you can exclude specific companies that you'd rather not have in your index based on whatever matters to you. Now I'm going to deep dive on tax loss harvesting. I know taxes are not anybody's favorite topic, but it is a really important one because in my brokerage account, I'm not just solving for what are my investment returns, I'm solving for what are my after-tax investment returns. For me, it's very important to think about tax optimization. Here's a little bit about how that works. First, our software will automatically identify losses. So it looks for any stock that's trading below the price it was purchased at. Then the software will sell that stock to automatically realize that gain and lock it in for you. It will then replace the position with a similar stock. So the goal here is to ensure that we're replicating the returns of the index. So we pick something similar, but not exactly the same, to avoid what's called a wash sale, which would erase that loss that you were trying to lock in. Finally, we repeat this over time. And so anytime a stock or a company dips, that's an opportunity to lock in that loss. And then our software automatically makes sure to avoid wash sales and build losses for you over the course of the year. So for me, this is great. As I mentioned earlier, I've got some gains that I'm excited about, but I'd rather not have to pay additional taxes if I can avoid it. And I will just highlight that, making sure you allow at least some rebalancing is what will allow this software to work and successfully tax loss harvest for you. I'm going to share something with you guys as a little bit of a preview. We haven't, done a big announcement yet, but we are launching what we're calling generated assets. This is going to be a combination of our generated assets offering, if you've checked out that website, plus our direct indexing. What this will allow you to do is create your own custom index. Right now with direct indexing, you have access to over 100. That might be perfect for you, but you may have something else in mind. There may be some other kind of index you want to generate. And what's great about generated assets is you can interact with our AI to build a custom index. That can be something really standard, like a sector, if that's the kind of thing that you're interested in. But there's also opportunities to get very creative based on any investment thesis you might have. So, for example, you might, have a certain fundamental that you want to base your index on. And you can do that with natural language. What's going on with price to earnings for a certain company? You can also be qualitative. So, for example, what's the company's return to work policy? If you think that's something that's going to impact returns over time, or even things like what's said on an earnings call. All of that is captured by our AI technology and will allow you to, in a normal human way, actually build your own custom index. Once you've built the index, you can similarly customize how you want to rebalance, how you want to adjust, and will automatically run that direct index for you against the index that you've created. So this is totally new and something that we're incredibly excited about because it gives you even more control and even more power over how to invest. I now want to spend a little bit of time doing Q&A, and I'm likely going to run long here, so I apologize for keeping everybody a little bit longer. I'm going to have my colleague, also named Julia, send over a few questions for me to take a look at for you guys. Okay, so the first one I want to answer is, what are the fees for a direct indexing account? That's a great question. So the fees for a direct indexing account are 19 basis points per year on the assets you hold in the account. What that means is if you invested $1,000, you'd pay a fee of $1.90 per year. So hopefully not gonna, take away too much from anybody. And that's just used to fund all of the technology and the cost of having these indexes. And it is typically higher than an ETF. I want to be fully transparent with you guys. But the question is that better or worse for you after tax? For me, I've done the trade-off that it's better from an after-tax perspective to use a direct index, but that's a choice that you should think about. The second question I want to answer is, why is the 500 the only available index on public? There are over 100 available. So I used the S&P 500 as an example here. But if you search in that index search tool, you'll be able to see a bunch of other indexes as well, whether it's by sector or a different kind of index. So that's definitely something to take a look at. There are a bunch of indexes. I know it can be a little hard to find them. It's a product enhancement we're working on, but I promise you there are over 100 that you can consider. With generated assets, do you get all of the benefits of direct indexing like tax loss harvesting? Yes. So it's going to be a great new tool. Definitely take a look at it when it launches, get all the details, see if it makes sense for you and your portfolio. But it's definitely something to consider, and it's coming soon. Let's see, what else? Someone asked, why is the minimum $1,000? So the minimum is $1,000 because it's intended to allow you to own enough of certain shares to get the benefits of direct indexing. If you want to own 100 companies in your index, we need to have enough dollars to allocate to all those different companies and still have a meaningful enough position in each of them to do things like tax loss harvesting, to do things like minimizing your tracking error or how much the returns of your portfolio deviate from the index. Next question was, can you create a custom index using a list of securities instead of choosing an example, a sector, for example? Right now, the direct indexing product we have is set to just those 100 plus pre-built indexes we have that then you can customize. Once we launch generated assets, as my mother would say, the world is your oyster. Anything you want to build, you can. So if you want to create a totally custom index using a list of securities, you can absolutely do that. And our AI technology will make that easy for you. Let's see, what else? With generate, let's see what else. I want to make sure I'm not repeating anything. When is generated assets going live? Coming soon. Please do keep an eye on your email. As you know, public likes to send out announcements of the things we're launching. I'm very excited about this one. I think it's going to be quite powerful. Are the realized losses displayed somewhere in your direct indexing portfolio? Yes, you can track all of your realized gains and losses for your portfolio, including your direct index. And then there's another question here about whether or not you have to manually do this tax loss harvesting. Fortunately, it is not something you have to manage manually. It's something that our software will do automatically. And that rebalancing software frequency depends on what you select. So when you're setting up your direct index, you get to choose how frequently you'd like your portfolio to rebalance. And then our software will automatically do that rebalancing for you on the frequency that you select. There will also be rebalancing if you deposit additional funds along the way. So if I added another $1,000 to the direct index I have already set up, that will trigger the rebalancing as well. I know I've gone a little bit over time, and I want to let you guys enjoy the rest of your night. I hope you will not hesitate to reach out to Public with any additional questions you have. You can reach us at support@public.com. Any questions you have about direct indexing, we'd love to answer them. We can't provide any investment advice because we don't know everything in your portfolio and what all your goals are, but we're always happy to share more about how the product works, how to get it set up so it's aligned to your goal, and any other questions you have. I know we got through some questions, but probably not all of them. So please don't hesitate to reach out to us with anything on your mind. We're super excited about direct indexing. We think it's going to make a real difference in a lot of people's after-tax returns, including my own. So I hope you'll take a look and let us know if you have any questions. And with that, I'll say good night. Thank you so much for joining us.